Good morning, everybody. Hey, I hope you had a very Merry Christmas. And if you're still off, I hope you're enjoying some time downtime. And we're back in the office today and tomorrow, but looking forward to the new year. And as we look at today, and Dave gets online here in a minute, we're really down to not a lot. There's not a lot of earnings coming out right now. We're at the end of earnings season. Economic news is kind of at a real skinny part right now, but we'll talk about a few things, and we'll talk about the economy as we head into the end of the year.
Only know you've been high when you're feeling low. Only hate the road when you're missing home. Only know you love her when you let her go. And you let her go.
As passenger there, 105.7 Highlands Light FM. We're at 18 here before 9. It's time to check in on your money and find out what Sam Hill's likely to go on Wall Street today. With a day off for the holiday and a half a day on Christmas Eve, there's got to be a lot of pent-up activity on Wall Street, and we got some information for you. Downtown Sebring we go to Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning and Merry Christmas.
Hey, good morning, Dave. Merry Christmas to you. I hope you and your family had a great, restful day yesterday.
We did, and I trust you did as well, sir.
We did. We entertained a few people here and there, but great day.
Understood and wonderful. Yeah, we had a peaceful one, just Gladys and me together, a brunch out, and then vegetating for the afternoon, which is kind of what an overworked disc jockey appreciates on a holiday, so it works out nicely. Well, we start out with a weird thing. On Tuesday, we actually had the Dow and the Standard & Poor's not setting a new record. The NASDAQ up a little bit to a new closing record, but down 36 points on the Dow and down 63 cents on the Standard & Poor's is nothing to get excited about, but I was kidding you when we started out. I'm just not used to seeing red ink in these indexes these days.
It has been a little while since we've seen some red ink, but definitely remember Tuesday was a shortened day for trading. And I'm sure that the volume, I didn't really look at it this morning, but I'm sure the volume was pretty light too, given that a lot of folks were off for the holidays.
Oh, I got to believe that. On top of that, with the noon closing, they probably headed to the doors in the eggnog about 10 a.m. for the few that were there, right?
Exactly. So you can't really give much credence to what happened on Tuesday.
Absolutely. It's just kind of weird not to talk about a new record because we kind of went a couple of weeks in there where every day seemed to be one. One of the things that might have dragged it down a little bit was news that came out on Monday after we spoke. Now we combine it up with this morning. There's some housing news that really wasn't all that hot. It's probably interest rate sensitive, I'd wager, right?
Well, I do think so, Dave. I mean, we had on Monday after you and I spoke, new housing sales came out for new homes. And they missed. They expected to come in at like 730,000. It came up at 719,000. So it missed by about 11,000 new homes. And then you take that and you lay on top of that mortgage applications are down last week as interest rates continue to move up towards that 4% mark again in terms of 30-year mortgages.
Okay, you put it together with, and after a couple of halfway decent months as far as housing reports were concerned, take it as a data point or take it return to the trend. We don't really know for sure, but November, December housing is always kind of iffy as we lapse our attention into holiday shopping anyway, right?
Well, that's true. It doesn't become top of mind again because of all the holidays.
Absolutely. Talking about spending, interesting report. We've both been kind of watching the numbers to see whether or not we can get any early indications on the Christmas shopping season. MasterCard's kind of the first to put out some numbers as far as how well we burned our plastic during the shopping season. And boy, doggies, was this fascinating. Retail card burning, according to MasterCard anyway, from the 1st of November through the 24th of December, they say we grew in Christmas shopping retail stuff. This is except cars, as you mentioned earlier, grew by 3.4% overall, which is a little shy of the 4% people were talking about. But doggies, get a look at these two comparisons. An 18.8% increase in online digital sales and only a 1.2% increase in brick and mortar stores. I was mentioning earlier that I saw a UPS truck running around town doing deliveries at 8:30 on Christmas Eve. That may very well be explained by that 18% increase in online sales, right?
Well, that's true. I mean, we're seeing a lot more folks moving to online. I mean, we're seeing the loss or the closure of stores. I mean, I haven't seen the number, but I know the number of store closures in 2019. If it wasn't a record, Dave, it's got to be close to a record because there was a lot of different companies closing stores, and we felt it right here in Highlands County with Sears and Kmart and some of the others. So definitely we're seeing that a major shift now. We've seen it gradually shifting to online. This year, I think you can say we saw a much bigger push to online shipping and purchasing because I think a lot of it was we had 6 less days, right, between Thanksgiving and Christmas. So shorter shopping season.
Oh, yeah, there was a big burn that we were talking about earlier this week. That Saturday, Super Saturday, was the single biggest retail day in history. $34.5 billion spent on the Saturday before Christmas. And the caveat that always comes in with that is that, number one, it was a shorter season, so we were catching up on time. And number two, we didn't know what the split was between online and retail. The brick and mortar stores were awful doggone busy last weekend. But sounds to me like Amazon and the other retail sites online were even busier than the retail stores were.
It definitely looks that way and sounds that way. It's going to be interesting, Dave, as we head into January to see what is the official retail sales number really look like.
Absolutely. And we'll also be watching because there's a lot of brick and mortar retailers. You mentioned all the closes last year, and I suspect that Sears and Kmart alone would set a record for the number of closures. But there's a whole bunch of other brick and mortar retailers that are under duress that we've talked about. And a 1.2% increase for them when folks were expecting 4% probably is not going to be very good for their future either.
I'm thinking the same thing, Dave. And you know, from outside looking in, I'm thinking, you know, I don't know if that's really a good thing for us as retail consumers.
Absolutely not. I like to look at stuff. I mean, I do my share of online. I'd be a liar if I said I don't do it. But still, my first choice is to be able to look at the stuff, pick it up, touch it, and buy it, you know, on the site. If I've got my choice, I'm going to do that locally. And I really hate to see the brick and mortar places getting under duress.
Yeah, it's kind of like, Dave, you know, we're going to go back to the time when I was growing up here where, you know, if you wanted to find a big retail store chain to shop at, you had to go to the big cities. And that may be what we start to see as online becomes a bigger part of retail sales. These brick and mortar stores are going to start to retrench back to big metropolitan areas in terms of their footprint.
And we're going to be left in small towns with a digital equivalent of the old Sears catalog as our primary department store shopping.
That's right. I mean, you know, I don't want to be, you know, predicting, but definitely that's what it's starting to kind of look like.
Now, we both hope you're wrong on that, but it sure does look like that on the trend, doesn't it?
It really does.
And that's not exactly a merry sunshine way to bring up on the day after Christmas. But yeah, 1.2% on retail. If that holds on the national figure for brick and mortar retailers, that will not be good news. The digital share, according to MasterCharge, was 14.6% of the retail shopping experience this year. I think I remember last year it was like 10%. So that was some monster-sized increase for online shopping.
Yeah, it really was. Now, yeah, I want to switch gears with you just a minute here, Dave, because we're talking about not good stuff in terms of online versus brick and mortar. I want to move to the global economy for a minute, and I didn't mention this before we went on there, but I read an article that's calling it, instead of globalization, they're calling it slowbalization. It's becoming, slowbalization. How's that? That the global economy is all slowing down, and the forecasting with this article is looking at 2020, obviously, and really thinking that 2020 is going to continue to be a slowdown in the world economy.
And that really kind of squares with something we've been talking about for a long time. Recession, probably not, but 3.5% growth rates, I don't think anybody seriously expects that.
No, definitely not. And this one really caught me off guard. They quoted a China finance minister that said that they expect their GDP to continue to diminish until 2025.
That's an poop from the standpoint of a major trading partner of ours, tariff war or not. We don't want to see China slow down to a crawl because that means we slow down with them.
Exactly. Well, the whole world will slow down with them, Dave. Everybody will slow down when China slows down.
Oh, yeah, the we is a plural we in that particular case. While we're at it, a little bit of good news, just a little bit. First-time jobless claims got put out this morning. It was down by 13,000, back down to the 222 range. It was about what the market expected, but I got to have some merry sunshine to throw out this morning.
Well, yeah, and that was a good thing. We didn't see a mass increase there. Again, it will be interesting. The holiday season is, I don't guess it's really over yet because you got all the returns and they still need the folks in the retail level for the next week or two. So it's going to be interesting as we head into January to see what does that number really start to look like. As you and I have been talking about the slowing economy, is it now that we're through holiday season, will we start to see some of that indication?
Absolutely. The fourth quarter always gets warped because it is the big time to spend money for the retail side of the fence. See what happens when the first quarter comes and cross our fingers that the dire predictions are wrong and we at the very least keep a growth rate. Resetting the table for the morning, the Tuesday half day of trading was kind of a nothing day, really. Dow was off by 0.13%, NASDAQ by 0.08% up, and the Standard & Poor's was off by a rock-crushing 0.02%. Not particularly impressive, and you certainly can't get a trend off of that. 45 minutes before we throw real money around, Phillip, where are we going this morning?
Well, Dave, we're all green across the board. We got the Dow up $27, the S&P up 5, and the NASDAQ up 15. So everything's in good green territory there. When we look at the commodities, gold and silver, gold has taken a pretty big bounce. It's up 0.5% this morning, but it's up over $1,500 an ounce again to $1,512. And we've got silver up 1.3%. It's up over $18 an ounce, $18.08. Wow. Yeah, pretty big jump the last couple of days there. And then we got crude oil, again, going the wrong direction for you and me, Dave, up 0.1% to $61.17 a barrel.
Yeah, it's kind of a psychological number on $61 a barrel that kind of makes me go bummer, man. I don't like that. Overseas markets, we got mixed bags in both Europe and in Asia. Japan was up this morning. Hong Kong must have read that Chinese report, Phillip, because they were off by about 0.0000%. European markets are small moves, but they're mixed this morning midway through their day. Phillip, somebody needs advice to be able to control risk, but at the same time capitalize on the good things happening. That takes advice from an unbiased source. How do I find you on the phone?
It does, Dave. I know people are busy right now with all the holidays, getting through them. Folks, the first of the year, 2020, a new decade is coming just around the corner. Put us on your calendar. Call us, 863-382-0037. Let's schedule a time to make sure that your portfolio matches up with what you want it to do. Catch us online at statlerfinancial.com. Follow us on Facebook at Statler Financial Services. And then the big deal, join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And almost every morning here on Light FM with a look at the day ahead. Phillip, thank you so very much. We'll catch you shortly, all right?
All right, thanks, Dave. I'll talk to you in the morning.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, I want to thank you for joining us today. I know it's the hustle and bustle of this time of year, but the first of the year is coming. A new decade is arising. And it's time to make sure that your portfolio is going to match up with what you want it to accomplish for you. Give us a call. Let us be by your side and coach you into and through retirement. Especially if you're already retired, let us help you continue to make sure that your money does what you want it to do. Call us at 863-382-0037 to schedule your appointment for a financial x-ray. Hey, have a great day. I'll talk to you again tomorrow.